Okay, so today we're going to review chapter 2 for Georgia. Everybody should download or should sign up for their own version, which you can get at abbanker.com/FEG. You want to get the cheapest one, the one that's $40. And if you need help with that, let me know. We'll see if we can arrange a scholarship. But I think $40 for your future is probably money that you could probably scrounge together. I know it's a lot less than our cell phone bills. So today we're going to be reviewing Chapter 2, Introduction to Life Insurance. So the objectives they have for us is distinguish between term policy, owner, insured, and beneficiary, determine when a conditional receipt is issued, identify the primary information source for underwriting, differentiate between standard, preferred, and substandard risks, determine when coverage becomes effective, and identify the producer's responsibility during replacement. So J is named in a policy as the individual who is entitled to receive the policy proceeds upon the death of T. Which of the following statements best applies to this scenario? J is the insured and beneficiary of the policy. T is the owner and beneficiary of the policy. J is named as the owner of T's policy. T is the insured in the policy, and J is the named beneficiary. Does anyone have any guesses?
D.
Which one?
D as in David?
D. That is right. A life insurance policy is being applied for on Z's life. In order for the contract to be valid, all of the following have an insurable interest and could be the owner of the policy, except Z's neighbor, Z's business partner, Z's spouse. So what insurable interest is that it is the statement that you must have, like if that person passes away, there has to be a financial loss. So which of these, remember, we have to be very careful. It says, in order for the contract to be, all of the following have an insurable interest and could be the owner of the policy, except which one? Z's neighbor, Z's business partner.
A.
That's right. Insurable interest is defined as having a relationship which would result in a financial or economic loss if the insured dies. A neighbor is not an example of a party that meets this definition.
You have to make sure you check.
Yeah, I was wondering if you went back, it's going to make you do it again, and so it is. So, let's accept Z's neighbor. So the responsibility is that you send them a copy of the buyer's guide and the policy summary. This is going to just be part of the standard practice that you'll learn. Not something, just something to know. It's not something. Information from a third party collected by the insurance company in the application for insurance and during underwriting of the policy may be subject to the jurisdiction of which of the following? USA Patriot Act, Unfair Claims Practices Act, HIPAA, and the Fair Credit Reporting Act. Does anyone remember that?
D.
D. Okay. The Fair Credit Reporting Act has jurisdiction over information collected through a third party for underwriting purposes. So replacement is something you have to be careful of. If you're going to be replacing a policy, you have to have a justified reason for it to be replaced, and there has to be something that's going to be better for the client. We don't replace policies just to make money. Everything we do has to be in the best interest of the client. HIPAA's privacy rules are implemented to protect the applicant from providing evidence of insurability, finding data collected on the initial sales appointment, require all insurers to perform testing for HIV, protect the privacy of all individually identified health information, or allow an insurer to obtain, investigate, investigative, medical, and financial reports to complete the underwriting process. Besides Anuket, does anyone know what this would be? Does anyone know what HIPAA is? HIPAA?
Yeah, I don't remember the full acronym, but I want to say it's C. It's either A
That's
or C.
right. Exactly. So HIPAA is a law that requires that you can't just call up and say, hey, could I get, IDEA's health information? Let me know. Could you let me know whether or not she's got X, Y, and Z? HIPAA
Right.
won't allow them to do that. So when you give the insurance company the right to look into your health, you have to sign a HIPAA form to give them the right to do so. So HIPAA's privacy rules require insurers to preserve and protect patient confidentiality when obtaining individually identifiable health information.
I have a question.
Absolutely, go ahead.
Going through all of these tests, both together and individually. Now, when we actually take the physical test, are they going to be similar questions or are they going to be somewhat different?
So the format of the questions is going to be different, but all of the information is going to be the same. So you might have gotten a question in the positive here, which of these is true? On the exam, you might get it, which of these is untrue? And they might give you 3 right answers and 1 wrong answer. But the concepts, if you go through these exams enough, you'll reach them all. You'll catch them all. So there's not going to be anything in the exam that you go, I have never heard of this. You just might not remember. And then at that point, you eliminate the 1 or 2 that you know are wrong, and then you guess from the rest. And then you go with your gut and you don't change it unless another question gives you information that lets you know that that first one was wrong.
All right, thank you.
So which of the following is not required to sign a completed application? The insured or guardian, the producer, the beneficiary, or the applicant?
The beneficiary.
That's right. The applicant, insured, or guardian of a minor and the producer's signatures are all required in an application for insurance. The beneficiary is not required to sign the application. So that means you can give money to whoever you want as long as there is a insurable interest. So a conditional receipt, I'll explain briefly, is when somebody pays the premium at the time of application or they give you their bank information at the time of application. A conditional receipt means that at that moment, if they get approved at any level, then they will pay the claim. So let's say that somebody applies for insurance today on August 5th, and then God forbid they die tomorrow. They're going to do the underwriting as if the person was alive. And then if they were going to get approved at any level, even if they applied for preferred and they got approved at rated, if they get approved at any level, then they're going to pay the claim out. That's why the urgency and just get started is so important. Oh, I'll do it tomorrow. Oh, I'll do it next week. Well, just start that process so that you have that conditional receipt in place. An application for insurance is completed and submitted to an insurance company. In order for coverage to be effective immediately, all of the following conditions must be met, except the initial premium is submitted with the application. So now we have to be aware that this said except. A conditional receipt is issued. A medical exam is not required. The policy is issued at a higher risk than the standard risk applied for. So in order for coverage to be effective immediately, so let's see, what do you think this is? It must be, anyone have a guess? I think I know.
I think it's C.
I think it's C.
I think it's C too. Oh,
It's D.
so in order for it, in order for the coverage to be effective immediately, the policy must be issued as applied for.
For.
Oh, that's different than what I thought.
In order for the coverage to be effective, meaning that a policy must be issued as applied for.
Okay, so now let's read over this question again. An application for insurance is completed and submitted to an insurance company. In order for the coverage to be effective immediately, all of the following conditions must be met. Oh, except
Right. 'Cause you don't have,
Except,
some
see?
policies don't require you to do a medical exam depending on the amount. And
Right. So what they're saying is, in order for coverage to be effective immediately, the policy must be issued as applied for. So the policy
Right.
issued at a higher risk than the standard risk applied for, that's the one where it will not go into
not
effect
effective.
immediately.
Okay.
Yeah. Underwriting is the determination of whether or not the person qualifies. Some require a medical exam, some don't. Some will, if some will only require a medical exam if they find something in the medical history that seems a little bit quote unquote off. Which of the following is not true about life insurance applications? Primary source of underwriting. Oh, about the application. It's the primary source of underwriting, contains two parts, general information and health and history, confidential communication between the agent and the insurer, may contain all the necessary information to determine insurability. Okay, now I'm going to go back and read a little bit because I don't know. Anyone have a guess on that one? The application is the primary source of underwriting. The underwriter will first confirm that insurable interests exist before continuing with the process. Once this has been determined, the underwriter will use the initial information in the application to either determine insurability or if any other information needs to be requested. The application consists of two parts. Part one contains the general questions about the applicant, such as sex, gender, marital status, residence, date of birth, occupation, past and present insurance. And then the other contains questions pertaining to medical history. So, which of the following is not true about the life insurance application? Contains two parts, yes. It's the primary source of underwriting. Yes. May contain all the necessary information to determine insurability. Confidential communication between the agent and the insurer.
I want to say D.
I want to say D too. I don't.
Yeah.
Yes. A copy of the application will be included as part of the policy and therefore not confidential. Oh, I see. Right. There is nothing confidential between the agent and the insurer.
Right.
Because the insured will get a copy. Okay. So there's nothing that the agent's going to, go talk to the insurance company and say, oh yeah, by the way, I got this information. It's all going to be available to the insured. So the Medical Information Bureau is basically a big brother, you might say, that has information about your medical history. Primarily, they look at medications that somebody else, prescription medications. An investigative report, they might need to do a consumer investigative report, look at your credit score. Credit can affect you in life insurance. If your credit is really bad or you've got a bunch of bankruptcies, they will consider you either a higher risk or they won't insure you at all. And then the agent's report is a statement stating that the person is, that what we're saying is true about the person. And we'll state, is there anything that we know that would make this person unfit? Like, do we know that they're actually a skydiver and they jump out of a plane, 5 times a day? They want to know information like that. All of the following statements regarding sources of underwriting are correct, except a medical exam may be requested based on the amount of coverage being applied for. We know that's true. The agent's report is confidential between the producer and the insurer.
That's it.
We know that's not true. A consumer investigative report may include a credit report. We know that's true. And the applicant may be denied coverage based solely on the MIB report. So I always read all of them, even when I'm 100% sure. And then I go back and I read, okay, what is this asking? Except. Okay, so I take that extra 2 seconds for those two things to make sure I'm right, because you don't know how many questions I've gotten wrong because I either forget the except or I get confused by the except. So there's nothing confidential between the producer and the insurer. Oh, wow. Wow. Okay. So we're wrong. See, isn't that funny? Okay. So all of the following statements regarding sources of underwriting are correct, except, oh, the agent's report is confidential between the producer and the insurer. Okay, but that's not part of the application. I see the distinction they're making. So the agent's report would be me telling them, yes, you know what, I know that this person is a, convicted felon, for example, or I know that this person, so it's the other way around. So when we get asked questions wrong, we want to read the question and then the answer again, and then, put it into our mind. So the part that is not true about underwriting is the applicant may be denied coverage based solely on the MIB report. The applicant may not be denied coverage based solely on the MIB report. This report is used as an alert for the insurer to gather additional information and to help detect fraud. So, for example, if somebody says, "Oh, I don't take any medications," and then they go to the MIB and they find that they're taking 5 prescription medications, what the first thing they're going to do is they're going to come back to me and they say, "By the way, this person said they didn't take any medications, but we found that they take 5 medications. Could you please clarify?" Any questions about that?
No.
Underwriting factors are age, gender, tobacco use, occupation, hobbies, physical condition, health history. Race, not relevant. Marital status, not relevant. Whether how tall you are, not relevant.
Education, not relevant.
Education, not relevant. Weight is relevant. Oh, it says here, physical condition, height and weight. Oh, height and weight, yeah. So yeah, if you're disproportionate height and weight, that can make a difference. Classifications of risk, there's standard risk, which is sort of standard. Preferred is they get a discount from the standard, so that means they're healthier than standard people. Substandard risk is higher risk exposure. These are people who don't fit the qualification for standard or preferred. These are people that typically have high blood pressure that's not controlled, overweight. They might have diabetes. Even though if someone has diabetes, they can still get insurance. If it's under control, they might even be able to get standard. So don't assume that just because someone has a health problem that they're not going to be able to get insurance. Especially with the companies we work with, a lot of people who got health problems do make it through and do get insurance. And then to decline, this is not a rating classification, but a decision that the risk is one for which the insurer refuses to issue insurance. In this case, the applicant is deemed uninsurable. Being declined by one insurance company does not mean a person will be declined by all other insurance companies. Different companies have different qualifications. Oh, a video lesson. Let's see what we got here. Can you hear?
After receiving required information, home office underwriters determine classification. A standard classification is one in which there is the same health and occupation as reflected in the mortality table. It is considered an average risk. A preferred risk is a better than average risk. It is a lower risk and qualifies for lower premiums. A substandard risk is a risk of high exposure. This is usually issued as a rated policy. Now, the policy may be classified as declined or a refusal to issue coverage. In that case, the applicant is considered uninsurable.
I'm really confused. Why aren't I seeing? Oh, okay. So it is recording. I just wanted to make sure. It's weird. So these are interesting things. So mortality, do they talk about morbidity here? No, but we should look up. So mortality tables are used to give the company a basic estimate of how much money it will need to pay for death claims each year. By using a mortality table, a life insurer can determine the average life expectancy for each age group based on the year of birth. The mortality rate is taken from the mortality table that shows life expectancy and the death rate per 1,000 people living in the U.S. This table allows the insurer to rate policies using the law of large numbers, so accurate mortality predictions are extremely important. The higher the age group, the higher the mortality rate, translating to a higher premium. So the closer you are to death, the higher you're going to pay, which is why you want to get life insurance as young as possible. The earliest age that someone's eligible to get life insurance in most companies is 1 month old. That's the age that everyone should start getting life insurance, translating to a higher premium. The mortality table also shows that males have a higher mortality rate than females. We know that men die earlier, so women have cheaper life insurance than men. Based on this statistic, males will pay a higher rate than females. Interest earnings are also used in calculating premium. Insurance premiums are paid in advance, and the insurance company invests these premiums and assume a certain rate of interest will be earned. Interest earnings reduce the amount of premium needed to fund the future liability of policy death benefit. Expenses is the amount charged to cover each policy's share of expenses of operation, salaries, commission, premium, taxes, and cost of doing business is called expense loading. This can vary from company to company based on its operations and efficiency. So one interesting thing to look at expenses in life insurance, the investment grade life insurance type, it's actually cheaper than your 401k plan. So that's one of the other things that we teach, besides the generational wealth creation, we give people a real education on what the Wall Street is doing with their money in the 401k. And they are, I don't want to use that word. They are screwing you. That's the word I'll use. The premium payment mode, the mode is the frequency of payment. You can pay monthly, quarterly, semi-annually, or annually. Which of these modes would result in the insured paying the least annual outlay for life insurance? Monthly automatic bank draft, annual, semi-annual payroll deduction, or quarterly?
Annual.
That's right. Paying premiums on an annual basis is always the least costly premium mode. Paying premiums monthly is usually the most expensive mode. Although some insurers may offer a discount for automatic monthly bank drafts, not all do. So this is not an acceptable choice. Payroll deduction is not a quote unquote mode. Policy delivery. A producer provided a conditional receipt to an applicant on May 5th at the time of an application based on a standard risk. The insurer required a routine medical exam, which was completed on May 15th. The policy was issued based on a standard risk on May 20th, and the provider delivered the policy on May 22nd. The effective date of coverage is May 15th, May 22nd, May 20th, May 5th. So this is that conditional receipt thing, I think. What would you guys guess? The effective date, which means that if the person had died, they would have paid out. My guess is it's May 5th because that's the point of the application and they were approved. Oh, wait, no. The policy was issued based on a substandard risk and they applied for standard. So remember that other question we had, which told us that the conditional receipt is not valid for a substandard risk on May 20th, and the producer delivered the policy on May 22nd. So delivery doesn't matter. So it'd probably be May 20th. Anyone else
20th.
agree with my logic?
Yeah.
Yeah, the 20th. No.
No,
Ooh,
May
they
20th.
cut it. Oh, so
Since
it's
the policy is not issued as applied for coverage. Oh, right. I got caught up. Right. Since the policy was not issued as applied for, coverage is not effective until the producer delivers the policy on May 22nd and explains the changes in coverage or increased premium due to a substandard risk. The applicant must accept the counteroffer. So in other words, if we say, okay, your life insurance is going to be $100 a month, we're set up to take that premium, but you get a substandard risk and now the price is $150. They're not going to automatically draft that premium. The person's going to have to say, yes, I either want to pay the extra money or no, I don't want to pay the extra money. How about you reduce the death benefit down instead of $500,000, maybe now reduce it down to $300,000 and let's keep it at $100. So the person has to actually accept that policy. So this was a very good lesson to learn that if it is different than what you applied for and it's going to cost more money, then you've got to the person has to accept the policy. That's really the issue is when you deliver the policy, that's when the person's going to sign for it. So we just learned an important lesson. Any questions there?
Nope.
Okay. All right. So let's see if we can have fun here. All right. Determine if the following statements occur while the application is being completed, during the underwriting process, or when the policy is delivered. The MIB report may be requested. That's underwriting. Required signatures,
Completing the application.
Application.
completing the application. Okay. Constructive delivery,
I guess delivery.
probably delivery, right? Formal request for the insurer to issue a policy,
Completing the application.
probably the application. Yep. Insurability is determined,
Underwriting.
right? Let someone else answer on, okay? We've been studying and doing so well. The conditional receipt may be issued. Any other guesses? Which point the additional receipt is done?
Completing the
Maybe completing the
application.
application, yeah.
There it is. Yep. The producer explains rating, premiums, coverages, and policy benefits. So when it says rating, that implies what?
I assume underwriting. I don't know.
So this implies that they had a rating. To me, it implies the rating that the insurance company gave them after the process. That's what it implies to me, but the wording is a little unclear. So I'm going to guess policy delivery. Let's see if I'm right.
Delivery.
Got you.
Okay.
Okay.
So a statement of good health. So when you state that you are in good health, that would be done when?
Application.
Application.
Right, but now we're running out of space, so that might be wrong. It might be 3 each. So the statement of good health might come from the insurance. Oh, it's
Oh.
not from the person, it's from the insurance company. We determine that you are in
Policy
good health.
delivery.
Good help from the MIB report, right?
Yeah, so this could be underwriting process. Nope,
Policy delivery.
policy delivery. There it is.
Yeah.
So at the delivery, okay, interesting. I want to go back and read that. So when we're done, that's interesting. I don't know. What, let's just look it up. Statement of good health. I'll use statement of good health, life insurance. You guys can see my new screen, right?
Mm-hmm.
What is a statement of health of life insurance? It's a document containing a series of questions about your overall health. Such as if you're a smoker, if you've ever been treated for a medical condition like cancer or high blood pressure. Interesting. I don't understand that one. We'll just look at it in the future. Classification of risk and rating. Where you guys think that would be done? Probably the underwriting process.
Oh, yeah.
So there we are. So the question that we have is statement of good health. When we're done with this, let's go back and try to find some information about that. Personal insurance needs, survivor protection, estate creation, estate conversion, cash accumulation, and liquidity. So estate conversion means providing money to pay estate taxes or loans which must be satisfied upon the death of the estate owner, the insured, preserving the insurance estate. This is actually worth going through. So there can be personal survivor protection, providing funds for surviving spouses and dependents, estate creation. So actually the money from the life insurance policy can create an estate. So this is the generational wealth creation that I'm talking about. Life insurance proceeds paid in a lump sum provide financial assets to create an immediate estate the insured can pass on to survivors. And it's tax-free. Provides money, we already said that, cash accumulation, amount of cash accessible to the policy owner from within permanent life insurance policies. This is what we use for generational wealth creation purposes and retirement planning purposes. Liquidity, immediate funds available upon death to pay creditors, taxes, and final expenses, as well as cash values available for policy loans. withdrawals, and full surrenders. So, when somebody dies, obviously final expenses are going to have to get paid. Then maybe that person has some debt. Maybe they have student loans that are outside of the government that do have to get paid off. I don't believe the government ones have to get paid off upon death, though. So understanding what liability you have, liquidity could help.
Personal uses, survivor protection.
So we already went through those. I think we're pretty smart. We understand what that means. So we're going to try a new exam attempt. The individual has the ownership rights of a policy is called the policy owner, beneficiary, insured, or applicant.
Policy owner.
Policy owner, yep, it's the obvious one. Typically, the owner, insured, and applicant be the same person, but not always, as in the case of a third-party ownership. For example, juvenile policies, key person policies. In this case, even though the owner is not the insured, he or she still controls every right that the policy affords. So the owner is the one with the power. Just so you know what a key person policy is let's say you've got a key employee at your job that if that person were to be gone or to die, your business could suffer immeasurable loss, like your top salesperson who sells 80% of everything. If he's gone or she's gone, then you would want life insurance to be able to replace that person and also replace the money that they were providing. On the day a newly issued policy has to be delivered and the initial premium collected, the producer discovers that the insured is in the hospital with a heart condition pending surgery. What should the producer do? Deliver the policy on the day a newly issued policy was to be delivered. Oh, this is a trick question. And the initial premium collected. So it's to be delivered and the premium has not been paid yet. So there's no conditional receipt. The deliver the policy to an immediate family member and collect any outstanding premium. Hold on to the policy until the insured is discharged from the hospital and then deliver the policy. Return the policy to the insurer with a letter of explanation. Collect additional premium at the time of delivery to reflect the higher risk the insurer now faces. What do you think the answer is?
C.
C? Is that what you said?
Yeah.
Correct. Producers must return the policy to the insurer if they know that the insured's health status has materially changed since the time of application. But if the conditional receipt were signed and the premium were already collected and they were put at the same classification as they applied, then you would be able to deliver the policy. If a home office underwriter obtains MIB codes inconsistent with information provided on the application, what is the underwriter required to do? Automatically reject the application and order any premium paid refunded. So we know from the other question that that's not true. So refer the case to the state insurance department for possible insurance fraud. Conduct further investigation to obtain more information prior to making a decision. Issue the policy at a higher premium due to the undisclosed higher risk. Any guesses?
C.
C. That's right. When the home office underwriter receives MIB codes that are inconsistent with information provided on the application, the underwriter is required to conduct a further investigation to obtain more information prior to making an underwriting decision. Underwriting decisions cannot be based solely on MIB codes since there could be a reasonable explanation for the discrepancy. Sometimes people took a prescription a long time ago and now they're no longer taking it or they no longer need it. So that's something that could be determined. A personalized computer-generated illustration detailing premiums, cash values, interest rates, and surrender values is called an advertisement, sales literature, a hypothetical, a policy summary. Any guesses?
Policy summary.
Yeah.
That's right. A policy summaries detail premiums, cash values, interest rates, and cash surrender values of a particular policy for a specific insurance prospect. In a replacement transaction, the insurer that is having its policy replaced is known as the blank insurer. The existing insurer, the conserving insurer, the insolvent insurer, or the replacing insurer.
Existing.
Existing. I'm not 100% sure that's right. Any other guessing? Oh, the replacing insurer. No, that
Replacing?
doesn't make sense.
Maybe.
Existing only makes sense. Right. The exist. See, I got tripped up by the wording. I thought it was saying anyway, it was not being replaced. It is the existing one. So the existing insurer is the insurer who has the policy subject to replacement. The producer discovers that the applicant is not in good health at time of a life insurance policy delivery. If the initial premium has not been paid, it is the producer's responsibility to A, charge a higher premium than what is written in the policy, deliver the policy and collect the premium as planned, return the policy to the insurer for further underwriting, hold on to the policy until the client recovers from their condition, then deliver the policy.
C.
That's right. We just so if the applicant is not in good health and the initial premium has not been paid, the policy should be returned to the insurer for further underwriting. This is why conditional receipts are so important. If someone says, no, I don't want to give you my bank info, let's just see how it goes. Or I don't want to pay now. Just simply say, look, if it doesn't come like this, they're not going to take the money out automatically. So if it's not going to be $100 and it's going to be $150, they won't put it in force. You're going to have to agree to it. So let's get your information ready in case it does get approved. Interest earned on premiums paid to an insurer helps to blank the premiums charged. Lower, standardize, stabilize, or increase.
Lower.
Interest earned on premiums assist in premium rate reduction. That's right. An applicant's signature on an application indicates what? That the producer had coached them through the process, that their statements are true, that it is up to the insurer to discover the truth, that the statements made were guaranteed to be true in all aspects.
D.
You think it's D? So in all aspects is a little bit extreme because there could be some things. Well, this is my recollection. So there's not. It's not that extreme.
Right. B.
B. I think it's B too. The applicant is representing that the statements on the application are true to the best of their knowledge and belief. So if they smoked a cigarette 10 years ago, once in their life, and it was so insignificant that they forgot, and they say, no, I've never smoked. And then, that was to the best of my knowledge. And blank report is a general report of the applicant's finances, character, morals, work, hobbies, and other habits. The agent's report, the motor vehicle report, the inspection report, or the attending physician's report. So think of these in logical terms. Would you find finances in the agent's report about their character, morals, work, hobbies, and other habits? Oh, wait. Now I thought I was convinced. So now I think it's A or C. Now we've got to guess. Anyone have a guess?
Yeah.
A.
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 A. Everyone says A. I think it's C, but let's go with A.
Yeah, because
all right, so we agree with A. A, check answer, wrong. It was C.
It's inspection.
So the inspection report is a general report of the applicant's finances, character, morals, work, hobbies, and other habits.
Yeah, because the agent is only going to go by what you say, but the inspector will go by and find out the information. So,
right.
Yeah.
Which of the following products provides an immediate lump sum in the event of a premature death? Life insurance, disability insurance, an annuity, or Social Security?
Wouldn't it be life?
You see, sometimes the questions are so obvious that it's like,
Right.
wait, what? Of these options, only life insurance provides an immediate lump sum upon death. In order for a life insurance policy to be valid, insurable interest must exist at time of blank. Application, claim, issuance, change to expiration, conversion.
A.
Unlike property and casualty insurance, for a life insurance policy to be valid, insurable interest needs to be, the insurable interest need only exist at the time of application when the policy is issued. Wait, insurable interest need only exist at the time of application when the policy is issued. That's interesting. That seems like wrong wording, but we
Yeah.
understand what they mean. Because the application and the issue policy issuance is different, but nobody's perfect. All of the following signatures would be required on a life insurance application for an adult, except that of the applicant, beneficiary, insured, or producer.
Beneficiary.
Beneficiary. Both the producer and the applicant insured must sign the application. If the applicant is a minor, a guardian must sign the application. In a replacement sale, all of the following are producer responsibilities except obtain information regarding the enforced policies, including name and policy numbers, complete a notice regarding replacement with applicant and producer signatures, provide copies of the notice regarding replacement and any sales proposals to the applicant and the replacing insurer, reimburse the applicant for any surrender charges that may be incurred as a result of the transaction.
D.
D.
Right. Reimbursing the applicant for any surrender charges that may be incurred is not permitted, but may indicate an improper replacement. So don't do that. An insurance company must adhere to the blank when gathering information about an applicant from third parties. Truth in underwriting regulations, Fair Credit Reporting Act, Medical Information Bureau rules, or Federal Trade Commission Act.
B. I don't know.
B or C.
B. So anytime that, so Fair Credit Reporting Act, even though it deals with the credit agencies, what it's really is a privacy thing. So when you're gathering information about an applicant from third parties, there are rules of what they must do in order to protect the privacy. So just remember that Fair Credit Reporting Act has to do with privacy with gathering credit information. So just add that privacy name to that Fair Credit Reporting Act. The FCRA applies to insurers when gathering information about an applicant from third parties. In a replacement transaction, all of the following are insurer duties and responsibilities except abide by the state required holding period for all replacement documentation, notify the existing insurer. So this is an except one. So let's really pay attention. These are the ones that catch people up. Maintain copies of the information provided by the producer. Contact the client to assure that they understand the transaction. So all of these must be done except abide by the state required holding period for all replacement documentation. Notify the existing insurer. I'm pretty sure they mentioned that. Maintain copies of the information provided by the producer are the insurer's duties. Yes, I'm sure that they must keep information from the producer. They must contact the client to ensure that they understand the transaction. So that makes sense too. So the only one that doesn't really make sense is A, because there is no period of time for replacement documentation as far as I know. So I would guess A here. Anyone else have another opinion? Oh, contact the client to assure that they understand the transaction. Oh, right. See, it's a trick question. It's not the insurer's responsibility. It's the producer's responsibility, I bet. The replacing insurer's responsibilities include upon receiving proper notification with the new application, the replacing insurer must notify the existing insurer of the planned replacement, maintain copies of the information regarding replacement for a specified period of time as mandated by the state. Okay, so they've got to maintain this. This is the insurer. So it's the producer who assures that the client understands the transaction, not the insurer. So now let's read it again. In a replacement transaction, all of the following are insurer duties. So anytime you see insurer, you can translate it as insurance company to keep yourself from getting confused by insurer and insured. So insurer, so all of the following are the insurance company's duties and responsibilities, except to contact the client to ensure that they understand the transaction. So the insurance company is not going to call the client. It's our responsibility as producers to do so. So we are going to review. We are going to grade the exam. And we got an 86%. So we passed. So if you pass it the first time, I would say do it again, just because there's going to be other questions that are not in that first 15. So they might have 30 questions that they sort of cycle through. So if you only do it once and you get them all right, then you might miss the other 15 questions. That's why it's good to guess and fail, because you're going to see questions over and over and over again. So this is chapter 2. The learning objectives. Oh, so this is now chapter 3, which we'll go over. The schedule is going to be Monday, Tuesday, and Thursday. Wednesday, we're going to do product training, discussion of Circle Financial, our mission, that kind of a thing. And then Monday, Tuesday, Thursday will be the life insurance exam masterclass. And I don't like to work on Fridays, so we're going to take Friday evening off. And who wants to be at 7 o'clock Friday evening in a class? Certainly not me. So any questions about any of this, any broad questions about Circle Financial, about life insurance in general, about taking the exam, or about chapter 2, please now's the time.
I might have questions after I finally bought the class and I'm going to look through it. So if I have questions, I'll just reach out later.
Awesome. I just want you guys to know that we're I'm really excited about what's happening here. What's exciting to me is right now I'm looking at the people on the screen and everyone is taking this seriously. And I know that we're going to have some people that are going to come in and out, and some people are working and they're only going to be able to watch it on the video recording, which is great and which is wonderful. But to be engaged and to be in this class and to make the time for it, I'm telling you, you're guaranteed to pass this exam. I did send the information to register so that you can do this yourself. Just take 15 minutes at a time, and just go through it, answer any questions that you have. And then take notes for things that confuse you. Donovan has been great at texting me and calling me and asking me questions. And, usually before I get back to him, he's already done his own research and has the answer. But I'm then able to talk to him and explain it in English. And give him that extra explanation, which I think he finds helpful. So I appreciate all of you. Donovan, do you have anything to say?
I said, yes, I do. I do appreciate when you break it down into English terms, because a lot of the phrasing of what they put here is, get you caught up.
That's right. And some words mean exactly opposite what we think they mean in the regular world. And they just, insurance companies, financial services firm, they create a language to keep people out. When we start talking about dividends and, interest and qualified plans and non-qualified plans, they use these words so that people get intimidated and they go, oh, I don't want to learn that. That's too hard. But once you really take the time and learn it and understand it, and you have a mentor that's willing to teach you and take you step by step. You have to understand, I've got 15 years in this industry. I've picked up a thing or two in that process. So any other questions, comments, thoughts? Well, it is exactly 8 o'clock. I really try to keep these meetings to an hour, so I'm impressed with ourselves that we were able to get through an entire chapter in an hour. let me get, you know what, I am going to give you, so I just got a new phone. So I've been trying to figure out like, how do I manage my numbers and who do I give what? So the people that I have direct contact with, I'm just going to be giving my direct cell phone number. So I'm going to put that in the chat. Do save that. That is the quickest and absolute best way to reach me. Also, if everyone would please text representative to 508-960-7357. So I used to also have a Google Voice number, which I'm now putting a little bit to rest, at least for now. I don't know. I kind of like the idea of a Google Voice number because then I could just pass it off to somebody else when the calls get too great. But the people that need direct access to me, like you guys are part of the team. You've got my direct cell phone number. And text representative to 508-960-7357. And I'm going to leave the chat up until everybody goes. And I wish you all a good night, and I wish you all peace.
Good night.
Good night, everyone.
Night.
Night.
Thank you.
Thank you, guys.